All right, good morning, everyone. Let's keep going. Okay, so Friday session was an interesting one. I mean, we sold off relatively hard at one point. It was really looking like things could get a little bit ugly, starting to feel like we finally were seeing some momentum to the downside, and we were going to really see follow through. We had a big bounce there in the S&P and the Nasdaq, only to trade right back down, basically touch the exact same lows of the session, and then we kind of drifted up for the last hour and weren't able to take out those lows. So, I'm not really, I'm a little bit uncertain this morning coming in, looking at the way that we traded, and or not so much the way we traded, but the way we finished off. One of the things that we saw into the close in the European sessions, we saw a total wipeout in the FTSE 100. We saw that index fall by about 1% inside 15 minutes into the close, and that was, I mean, it was just ugly how it fell 50 odd points in a 15-minute space, which can't remember seeing anything worse than that, back in 08, 09, unless it was obviously, some sort of data-driven event. So that was really interesting. When I saw that happen, I saw that in conjunction with us making lows, obviously in the S&P and the Nasdaq, there around, you can see around the 11:30 hour, that I thought we were going to get wiped out, and the fact that the U.S. markets managed to hold on, I think, is a big win. So we've had a lot more data out over the last week. We obviously had GDP, which came out, was a shocker. We had the Chicago Purchasing Managers Index as well, not great. And so we continue to see this outlook picture start to look weaker than expected. And I think the reason why it's such a precarious position is simply that Janet Yellen came out literally only over the previous weekend and said that they probably raise rates before the end of the year. And it's going to be almost impossible for them to move from that point to move to doing any more type of easing. Just keeping rates where they are is one thing, but now all of a sudden it's starting to look like the States is soft and the global economy is soft, and everybody's kind of got the foot on the gas. So I think that's really worrying. Whether or not we're going to get any follow through to the downside is a whole other picture. But anyway, let's move on to the Asian markets. This morning, Shanghai exploding again. What's going on there right now, we keep talking about it. It's quite spectacular. The rest of the markets are totally uncorrelated to the Chinese market on a daily basis. And we had PMI numbers coming out of China this morning, more or less in line with expectations. There's no sort of real leadership there. We do have the Nikkei, which just ended an 11-day winning streak today. So, considering what global markets have been doing, I think over the last week and a half, and our market's been doing relative to the Asian markets, I mean, it's a 100% inverse relationship almost to an extent. All right, let's get on to the chart of interest of the day. So talking about China and what's been going on there, Chinese turnover and Chinese equities has exploded far past what U.S. equities turnover is as of the last couple months. And you can see there, I mean, it's not only is it just gone through, I mean, you just go back to March, we were doing about $100 billion a day and less of turnover on the U.S. Or on the Chinese market than we were here. Now we're doing 100 billion a day more. That's like 3 months later. I mean, it's 2 months later, really. I mean, that's just unbelievable. And obviously we've got a market that's in a bubble there. But, when that unwinds, what's going to be the cause, or what's going to be affected, I think is kind of the important thing to think about. And that could be a long ways down the line, obviously. All right, this morning we had a lot of stocks going ex-div. We got AWA, HSPs, LHCs, RBX, SOVs, TMGs, and TCPs. So if you're involved or going to get involved, just keep that in mind. In terms of market data this morning, we had Japanese capital spending year on year, which was much better than expected. Chinese PMI more or less in line. Japanese PMI in line from previous month. The HSBC China PMI was in line. Then we have PMI numbers coming out across the Eurozone, Germany and the and the Eurozone at 9:55 and 10. Then we've got same thing later today in the States. We've got CPI out of Germany at 2 and ISM manufacturing in the States today as well. So it's a big day of data today. like I said, we've kind of shifted into a bit of a softer spot in terms of U.S. data of late. So, how that's going to play out, we're going to have to wait and see. Let's get into the maps. The first thing I want to look at is this chart here. I already got it up. That's the ALZ future, and this is a 30-minute chart, and you can see not looking pretty here in terms of little head and shoulder setup that we've got. We dropped out of into the close on Friday. They put up a real good fight there around 46,500, which is where I'm going to say, I've drawn this level a little bit higher than that, but remember we touched down to 46,500 the other day. And we put in a lot of consolidation around there. I mean, I think the levels may be slightly higher, but for a round number effect, let's go with 46,500. We've got a target of around 600 odd points to the downside here, so maybe just south of 46,000 if this target's to play itself out. So, this comes on the back of, I'll go out to the yearly here. I think we're down 9 sessions in a row on our local index, which is something we haven't seen in a long, long time, which obviously throws into context kind of where we are in the space of things. So just keep that in mind that we have already had a big move to the downside, and we may be due for a couple days of a bounce. But technically, in terms of the short term, you can see that we've definitely dropped some major support and I think quite a convincing pattern. So if we stay below 46,500, for the morning here, I think that's ominous for the rest of the day. All right. Let's look at the FTSE real quick. I was going to try to show you guys, for some reason my 2 days not working on here, so I was going to try to show you guys the market bombing out into the close. Sorry, unfortunately I can't show you that. Let's look at CPI, Capitec. So we talked about this, I think, on Friday, and the importance of the 510 level here, which we dropped into the close, even with all the buying that they had to do for the MSCI reweighting. And you can see here that we dropped that level at 510, and we've definitely obviously got a little bit of a head and shoulder setup here. It's quite obvious. There's a lot of head and shoulder setups doing the rounds right now. Another one is MediClinic. So these are a lot of names that a lot of guys really like. I'm not going to try to draw it like that. Let's just leave the level at 120. If we drop 120 in Discovery, which is a major level, it could get a little bit ugly. But definitely looking head and shoulderish there as well. CFR coming into some support around 105, so we really built a ceiling here, and when we broke out, now we've kind of built a little bit of a floor. Watch it today if we get down and test that 105 level. See here, Harmony. So Harmony, we're looking at a yearly here. You can see Harmony literally came down and kissed the previous, the all-time lows, and made a reversal up off of that, and quite a convincing reversal, I would say. So if that level drops, then obviously it can get properly ugly around, call it 1670, but that for the time being I think is a big level that we've just bounced off of. Trueworths in the retail space, obviously on the back, again, second day play. We got out of it on Friday, also had to buy big on this one at the close, but wasn't able to even hold this 87 level, and we still kind of closed right at that level, and I think that that's important for me. It kind of looks like triple top-ish or a little bit head and shoulder-ish or whatever. Either way, the pattern doesn't look great. So if we can push below 87 here, then I think it's quite a larger target to the downside. Maybe coming into here to some sort of support here around 80 bucks and the 200-day moving average. If you can see where we maybe broke out of that pattern there. And the last one we'll look at is another retailer, that is Clicks. Clicks bombing into the to support. I think it really took it out. As of the close, maybe around 87 bucks. We close at 86.16, so maybe a little bit of downside left on Clicks as well. And the target here would be probably closer down to 75 bucks. That's it for today, guys. Good luck out there.